Investors will focus on falling profits, more dovish Federal Reserve and lower interest rates as major US banks kick off what analysts expect to be the first quarter of contracting corporate earnings since 2016. On Friday, JP Morgan and Wells Fargo will post results to begin the earnings season in earnest. Citigroup and Goldman Sachs will report the following Monday, followed by Bank of America and Morgan Stanley a day later. In the wake of the Federal Reserve's cautious shift due to signs of softness in the US economy and the subsequent drop in 10-year Treasury yields, S&P 500 banks are seen posting a year-on-year first quarter earnings growth of 2.3%, down from 8.2% forecast just 6 months ago. The central bank's change in tack put the brakes on what's been a pattern of quarterly rate hikes amid signs of slowing economic growth. Slowdown jitters have also hit 10-year Treasury yields. The benchmark bonds yields hit a 15-month low in the first quarter, flattening the yield curve and narrowing the gap between the interest paid depositors and interest they charge consumers, which is bad news for profits. In the first 3 months of the year, the S&P 500 bounced back, gaining 13%, its biggest quarterly increase since 2009. But financials underperformed the wider market, gaining just 7.9% in the quarter. Let's take a quick look at the charts. Let's kick off with JP Morgan. Again, dicing with the longer-term moving averages. We're above the 50 but below the 200. Momentum very, very mid-range. Again, trading sideways at best. We've had a false breakdown just before beginning of April. Again, back in a very neutral territory. Let's move on to Wells Fargo. Again, playing with the longer-term moving average, the 50-day, quite a way above from the 200-day moving average. Look how that acted as resistance in December and in March. So again, that is quite a key moving average to keep an eye on. Momentum mid-range, volume pretty dull, not a great deal going on that chart right now. Let's move on to Citibank. Again, this is a more interesting chart for me, basically trading on the 200-day moving average, former resistance level at this area. Momentum ticking up, volume not very exciting, but again, this looks as if it's probably ready to push higher. But again, you need a sort of 1 to 3% close above that 200-day and or a 2-day close to really get super bullish. And finally, let's wrap up with Goldman Sachs. Again, this is sort of a rounding bottom type formation, momentum ticking up, volume pretty dull, but still well below the 200-day moving average.